Tuesday of this week, CVS Health, ticker there's CVS, pharmacy giant. They reported their Q4 results. They said that their revenue in the fourth quarter was up 4% to $69.6 billion. Their GAAP earnings fell 44% to $975 million. Adjusted earnings per share dropped 25% to $1.30. However, that was still a little better than what Wall Street expected. Analysts were looking for $1.24, and CVS Health is projecting full year 2021 adjusted earnings per share of between $7.39 and $7.55. So, Brian, what do you make of CVS Health's Q4 performance? Is this a stock that investors should consider buying right now?
Yeah, so the retail and long-term care segment, the revenue was up there. So this is like the pharmacy. The revenue was up, but so were the costs because they have issues that they have COVID-19 related costs, and so that caused the operating income for that segment to drop. And then it was sort of the same story with the healthcare benefits. That segment had been doing really well. So this is like their insurance segment. That segment had been doing really well because people weren't going to see their doctor. So while they had some increase for COVID-19 related expenses, a lot of people were just not going to their doctor. And because they were continuing to accept premiums, that segment, the operating the profit on that segment had been doing very well for the first 3 quarters of the year. In the fourth quarter, it slipped a little bit. I'm assuming that's because basically people eventually had to go to their doctor. And so the fourth quarter, they saw an uptick. And then for the guidance, the 2020 adjusted EPS earnings per share is supposed to be in the $7.50 range. And so you had said that the 2020 adjusted EPS for this year or for last year was $7.50. And so comparing that to the guidance of $7.39 to $7.55, it looks like it's going to be a slight a decline to maybe a slight increase for earnings this year. And I think that's probably a lot of that's going to be that healthcare benefits segment, because the insurance is going to have to pay for all the issues that are caused by people not going to their doctor this year.
Right, and that's Aetna. CVS Health bought Aetna. I guess was it 2 years now? I guess maybe. And in the last couple of years or so, CVS Health bought Aetna, and of course that's been a big pivot for them to expand their healthcare offerings. Brian, the stock is, you might say it's dirt cheap right now. I'm pulling it up. Their forward price to earnings multiple is 9.8. That's pretty cheap, right?
Yeah, I mean, it just depends on the growth, right? So
yeah,
it's not that cheap if earnings are declining and continuing to decline.
Yeah.
So I guess it just depends on when you think that there's going to be a turnaround. And I think that 2021 is going to be challenging just because of the year over year comparison, especially in the insurance segment of the company.
I think you're right. I think we'll know more about the prospects for CVS Health probably in 2022. I think that's when we'll see things maybe return more to normal for the company, and we'll get a sense for how things really are going for them. They face some challenging dynamics in the pharmacy area for sure. I mean, you've got Amazon.com looking to, they've thrown their hat into the ring, and so I think you're going to see things change quite a bit over the next several years, but CVS Health has done a pretty good job of adjusting to these changes over the last few years.